The stock market is crashing, but there are at least 5 ways you can make money in it. Hi, it's Marco here, and in this channel we don't beat around the bush. The first way to make money is by buying a option edge. And you can have a very quick look at options on the Nasdaq website. So as you can see, Apple option chain. So this is an example with Apple. If you want to hedge yourself to, for example, what an option is in this case is an insurance. You would pay to make sure that you don't lose money on your investment, that you actually make money if the stock goes down. So you want to hedge yourself to, for example, let's select a year from now. So this is actually December 2021, so it is the past. But let's imagine you want to hedge until January 2023. So you would select that, and you can, for example, buy options that are valid, and they would give you, basically, they would start making money if the strike price goes below the price that is in the option. Now, there are many types of options, and this is one of the possibilities. So as you can see, the price of Apple today is about $170, and so if you buy any options with a lower price, you would start making some money as the price goes down. But the bottom line is that this is an insurance. You would need it only when the market crash. Otherwise, it's just money that you're actually putting there, that you're actually spending, but that can potentially not bring any return to you. So bear that in mind. But there are other 4 ways you can make money, and we're gonna have a look at the next one in just a second. And like I said, I'm not just gonna waste your time. The next one is investing in crypto yielding. So that means, or crypto farming, it's also called. And I really like to use BLOCKFI, because BLOCKFI, what they do, they are very much safe. And I'm gonna talk about safety later. But this is my actual account, guys. You're not looking at some far-fetched numbers. This is how much money I have got in USDC. This is how much interest I got in just having the money with BLOCKFI for literally, I think it's about 2 months. No, not long, like about $100 plus another $17 that I'm getting, and that's already interest I'm gonna be paid. And as you can see, at the time of recording, the yield, so that's how much money you're gonna make at the end of the year. It's called annual percentage yield, APY, is 9%. So at the end of the year, you would make 9% just by keeping your USD coin here. Now, if you don't know anything about crypto, USD coin is actually the stable coin that Coinbase has created, and they basically are behind it. So it's very safe. It's much, for example, safer than Tether. That's something I've made another video about it. I'm gonna link the video in the description below if you want to know more about Tether. But then you have to understand that obviously another risk is for BLOCKFI to go bust, or for the borrower of your crypto to go bust as well. Well, that's why I think BLOCKFI is the best platform, because they basically run checks to make sure that the borrower of your crypto are good borrowers. They are not people who are just speculating like crazy, and they actually have cash to back them up. So if they basically won't just basically lose your crypto, that's the bottom line, to make it as simple as possible. And BLOCKFI is literally the best platform for that. If you want to use BLOCKFI, you would also get a bonus if you use the link in the description below. But as I've shown you, I actually use it myself. So I'm not just talking the talk, I'm also walking the walk, guys. So use the link in the description below. But now we are gonna move on to the third way you can make money in a stock market crash. And this one is very interesting, I promise you. The next one is to start looking at dividend paying stocks, but not just any dividend paying stock. We are gonna look at cyclical stocks, and cyclical stocks are those that tend to basically, just look at the image, guys. Just focus on this. Look, boom, bust, boom, bust. So it keeps like, this is a boom and then bust, boom and bust. But overall, this is a business that is very safe. This is, for example, Rio Tinto. This is a miner, guys. So that's something I I'm really looking into it right now to buy quite a lot. But what is really good is that this company has been around, wait for it, since 1989. They've been through all the booms and busts that you can think of, guys. I was like few years old back then. So just to tell you how long this company has been around. Crazy if you just think about it. On top of that, look at the gains in, okay, now we're talking 32 years. It's gone up over 1,000%, 1,100%. But here is the deal, guys. This is what makes it so sexy. The dividend yield, guys. Dividend yield of just about 10%. So every time they pay a dividend, and now we're gonna look at the chart to see how often they pay the dividend as well. So at the end of the year, you would overall make that amount of money. So it's a whopping, and that's not a joke, 10% of the value of the share. 10% of the value of the share, guys. Just bear that in mind. So they pay every quarter. I can see every time there is an earning, there is a dividend. So that's very good. You don't have to wait once a year to be paid. You get that every quarter. Now, there is a purple line here. This is, by the way, TradingView. If you want, I'm gonna actually put another link in the description if you want to use TradingView. I'm using the paid version. I find it so much better. Obviously, I have the YouTube channel. I don't want to lie to you. I have the YouTube channel and I'm obviously monetizing this. But I think that even for normal investors, you can just save your own charts, draw lines, do a lot of things. And it's basically what I'm showing you is now the daily chart. And we're now going to move on to the week, because my expectations is that the stock will actually come down in price. If you look at what the company has done over the years, right? This is the same chart as earlier, but just more in detail. You see that it has come down to it or close to it every time. After every boom and bust, it has come down to this line. And then here it didn't go all the way. Why? Well, just look at what date is that? That is when the Fed went in and started pumping money into the market like an absolutely nuthead. So it didn't have the time to go all the way to the purple line. But this time, the Fed is actually against that. And by the way, I make video updates on the Fed and what the Fed is doing. So subscribe if you're interested in that. But basically, what I'm expecting is a little bit of capitulation until we maybe get to this level over here. And so I will keep you updated on Rio Tinto as well as a very good dividend paying stock that I'm looking to add to my portfolio. Now, let's move on to the next way to make money in this stock market crash. And the next one is, I need to be very careful with this one because it's not for everyone. I must admit, this one could be something that could just fit some investors, not all investors, but that has proved to be incredibly profitable for a lot of people, not just like a small minority. So like I said, the stock market is crashing. But if you, for example, are looking at entering the market, or you have decided that you are kind of tired with like picking stocks, and again on this channel I picked stocks and stuff like that, and I talk about news about many stocks, you're just tired. So let me give you the solution, guys. The solution is to let's do some passive investing. Now, this is what passive investing is about. You buy the S&P 500, for example, and you do that even during a stock market crash. To be honest, you should be actually happy to buy now because at least the market is a bit weaker, and you know that in the future you will have a better return than today. And that is because the S&P 500 always goes up. Like, I'm not gonna obviously tell you to do it. This is not financial advice. And like I said, it doesn't fit everyone. But the bottom line here is that passive investing is true and tested and has basically got a lot of advantages. For example, you don't have to think about it. You just buy every month, every day if you want as well. There are a lot of apps that now allow you to just set up an order, a standing order like a bank account basically, and every day, week, even month, you just buy the S&P 500 or any ETF that you like. and that happens regardless to crashes and not. And also the S&P 500 pays a dividend, and that's never bad, guys. On top of that, and this is something that many people forget to mention, the S&P 500 is one ETF, and so you have the benefit of not having to pay taxes on a number of stocks. So for example, let's imagine you have a massive gain on Tesla, and then you have a lot of other stocks that you have a loss on. Well, if you live in the US, you can actually sell your losers and you would offset your taxes. But if you live in other countries where this game doesn't work, well, you have to get clever in other ways, and by just buying the S&P 500, well, you don't have that problem. You just buy, keep on buying. And by the way, the most important thing here is that the name of the game here is to keep it for a long period of time. So we're talking about 5 years. But now let's move on to the next one. And so this is actually my portfolio, one of my portfolios. So what I did, and that's very important, like if you have a portfolio similar to mine, I have a lot of Tesla and many other stocks, but what is important to understand is that if, for example, you have a stock that has got a lot of profit, and so in my case was Tesla. So what I did, I went and actually sold some of it. To be precise, I sold half of it, and I took out so much profit that basically means that I'm running with the house money, which basically, again, it means, in other words, that you basically take out the profit, which is the money that you've put in at the beginning, maybe with even more profit. So you already take away all the risk. You just run with the money that you have made. So overall, the risk is incredibly reduced. And as you know, the stock market is not really predictable. We can try to make assumptions, but no one knows what the future holds. That's the bottom line. We can try to predict that inflation and high yields in the bond market will create a stock market crash, which we're already seeing in these few days, and we aren't even there yet. But the only thing we can do is to stay up to date with the latest news on a stock market crash, on the Fed and everything. And on this channel, I make these kind of videos. Other than that, thank you for watching. See ya.